Hello guys, just confirm that you can hear me and that you can see just the picture on the screen. And now I'm gonna change the screen to share, yeah? Now you see that chart. Okay, I think we're just gonna start here. We're still waiting on some people to try and join, but we're just going to start. When the newer guys get in, I'm going to start off with how they open up this and how they get the default profiles and all of that, because some of them don't know how to get that set up. Yeah, but for now, I know you guys in here already knows how to do that. So we took out the list from this morning's live room, yeah, and we picked up these pairs here. So this is what we normally do every day, and this is how I set mine up, and I suggest maybe just copying that same setup, because I got that setup from somebody that trades very well. So I just copied his setup. Yeah, so we have this two major pairs that we look at every day. Doesn't mean that we trade these pairs every day: the pound and the euro dollar. We used to have the yen in here now, but recently it's proven not that good results on the strategy. So what we did was we just used these 2 years standard. So every day we just look at them, and we look at them because this is the most common pairs that's out there and everybody trades them. You get a feeling if the pound is weak, if the pound is strong, and in this one you get a feeling if the euro is weak or the dollar is strong. You just get that feeling. Like here you can see the pound is constantly going up. If you look at this here, it's been strengthening for a while here on your higher time frames. Yeah, so this is why we use this. We just want to find out what it's doing. So for weeks now, it's been going up. So this is what we know coming into the market already. And we know that this year is potential for resistance there. So any trades against this major trend is a short-term trade. Yeah. And if you are trading this pair, then, and you're trading against the trend, then you're going to need something to the left that's telling you that this is what you want to do. Like here to the left now on 480, you don't see a reason. Do you see anything to the left to trade short? You're not seeing any reason, because that reason is only coming up somewhere way up here. The reason to try and trade against the trend, we don't see any reasons there, right? This is long. So you are looking for retracements. So this is an area where you could look for that retracement. Say, okay, it's enough retracing. Let's try for that long. Or if it comes down further, we're looking there. Let's try the long here at the midpoint, the 24 EMA. Or let's try it long here. So now, because of I'm already long looking at longs for this, that's the reason why, we're just looking at this just to see what it's doing. Doesn't mean we're going to have to trade it today. Give me 1 second. So that is how we just go about looking at these pairs first. And then obviously we are doing that here on this piece here. This is how we're setting it up. The pound versus the dollar. So this is a bigger, broader overview on just everything. Not a bird's eye view, but it just shows you everything on one screen, real estate sort of a thing. 480 is long, 24 is long, 120 is long, and 120 is long, right? But long up until where, or where's the retracement heading down? Up until which point? So it's sitting on an area now where you would think, okay, it's long and it's given me a retracement. It's not the best because we like deeper retracements. We like deeper retracements. So let's go long here. Or 0.1% long here. Or 0.2% long here. Or 0.3% trade long here. Because now you're getting something like this, which looks like fairly close to the trend line here. So for that reason, we are looking for the longs there. Yeah. So now this M6 is sitting on the 12 on your other chart here. There. And you're looking for potential long. So what do you need? You need a break of a structure. And break of structure. Now I need the pen again. 1 second. If you want to get good at this, then look at that Elliott guy. I know it's daunting and it is seemingly a waste of time, but the guy actually knew what he's doing. We are looking for any structure, and a structure starts with a zigzag form, yeah? That is the least structure that you can get. This is the least structure that you can get. It's always better to get that as another piece so that you can add that 2 points there and then come down with your trend line there. So which means trend coming down, up, down, up, down. That's your least of your structure. Sorry, without this is the least of the structure. So it's always better with that piece in there. Now, another mentor of mine, Mark Chapman, he likes to mess around on the chart too much, and then people tend to keep watching but really not knowing. So I'm gonna rub out pieces to make things clear as we go along. So you get your minimum structure, which is a zigzag correction. And why are we looking for a correction? It's because on our M12 we are looking for longs. So we are a M6 correction. So in this case, you don't have an M6 structure. You do have this as a correction. But then if that is your correction, then you're looking for that area to break, not this to break. Yeah, because this is my zigzag formation here. So which means that's 0.1 and that's 0.2. However, you can, with this strategy, also look at structure on an M6 and define structure when prices are crossing over These are my EMAs. Prices are up here and comes down on my M6. So this, you can now, instead of look for structure on M6, you can now look for structure. Instead of M6, you can look for structure on M3. Like this. So now you look at structure, and this is your zigzag formation now completed. So what point is this here? What point is this on your M12? Just put some answers in the thing there, please, in the chat. What point is this on my M12? When I go to M12 now, I don't want to show you. I want to see if you pictured it. Yeah, it's an EMA touch. It touched actually your midpoint, your 12 EMA. So is that a good trade now, or can you take this trade but on minimum risk? Yeah, you're only taking the trade once you do get your whole setup, yes. But it's this whole thing now happened on your M12 and on your EMA 12 moving average. Moving average also 12. So minimum risk if this happens. Minimum risk to the long side. Okay, minimum risk to the long side. The reason why is because these prices are just going to go up and down and do what it wants to do. We only want something to define to us what we want to do here. Yeah, because here was a break, pull back to the long side, but okay, it only had one candle, but this one was a break, pull back to the long side, and it was a valid setup, and it doesn't work. You just keep going so that you know what you're doing at every single point. Otherwise, you can just press buy and sell at any point you want. And that is now obviously not the way we trade here. We're looking for the setup so that we know what we're doing at all times, every single time. And then you will learn by yourself, okay, now I like 3 candles to pull back instead of 2. Then the minimum is 2. I can go for it. 2 candle pull back and buy. But for me, I like 3 candles most of the time. Or I like it when I get that last kiss happening on the line. Okay. Okay, let's see. So I'm going to keep on working inside. These are all the charts that I look at, and that's going to be the 28 different pairs, yeah? 28 different pairs here in your profile. And then we choose in the daily live room, we choose which ones we're going to try and look at for the day. So what we picked up today was just a few pairs here. We chose this for in our London session. We picked it up. Yeah. So let's just see what's happening here on the Aussie versus the franc for now. Yeah, Aussie versus the franc. Why did we choose Aussie versus the franc? So we go into that. Okay, so we are looking at this and we see that we are long, and we really basically confirmed long here. Not really. The confirmation comes only after you get the break, pullback, and the move up to the long side. Yeah. So it's not completely confirmed yet. You want that white candle, because this year, let me show you. To go deeper into this, you do get your crossover here, and then it comes back down, and now all is crossed over. So if that gets so long, then you are confirmed long. So at the moment, you're still looking for longs because prices are up there, and it's not a perfect, nothing is perfect. It would be great if this was crossed over when this happened here, when this break pullback happened here, like this. Breaks up, it comes down, but then all of them are not crossed over to the long side here. So, but we're still looking for longs anyway, yeah? So now you're looking for longs and it's retraced on your M12, still looking for longs. And again, it retraced only till the 12. So now it retraced to the 12. And then on your M6, this is the retracement all the way to the 12. That is my 12 retracement. So are we done retracing? We don't know if we're done, but it's a good chance that it's done. And for that reason, we are now looking for the structure break. So we need a correction. So the easiest correction that we have is a zigzag, and you're getting one here. The minimum piece as well. So now what you're looking for is a break up. As soon as the break up happens, then we are looking for a break pullback on the lower time frame. There. So now we define the line, and we can see this is the line. Nobody's going to refute that that is the trend line. Unfortunately, with Renko, you're going to have to adjust all these lines and stuff. And for that reason, for the adjusting part, this is why we cannot leave our normal charts out of the picture here. Unfortunately, you know now that you want to go long on this, right? So now you're looking at Heikinashi stuff. I want to go long, but look at where I am. I'm right at this thing here. So immediately my risk needs to go down. Because I want to go long, but I'm on an EMA that tells me I would like to turn. So my long situation is, a little bit diluted now. So I need to go lower risk on that. Counting in my favor is that prices are on the 12-year on your daily to go long. Target could be the most recent high. Zooming in, where prices are at the moment up to here is about 40 pips. So that's not the best of situation there, yeah? But it's fine. It's double the amount I usually get, which is like 20 pips. 4 hourly is this. 4 hourly has a nice looking trend going up here. So that's counting in my favor. It's broken the 36 and we're still there. So what I would really like to see here is the break of that structure, which we're getting. Zooming in here. Now, the setup for me would be better if we're getting it above the EMAs here. Which is, we are here now. We are like 4 pips away. Then I'll be fine. I'll be fine with the 4 pips. Hopefully it stays up there. But it could be a break to the short side too. We don't know. Take into consideration the top, where prices are. It is a break. It would be nice to get that break up here. And have matters look like this instead. That would be perfect. But remember we are already looking at, this is the pullback already. So looking at this here. Sorry, let's just go first down to the 15 minute. Yeah. Yeah. So this is how it looks here on the 4 hourly. So it looks okay. Not 4 hourly, on the 15 minute. This looks like a nice one. It's kissing the trend line coming down as well. There. That's looking good. So if you don't want to do it with the Renko, you can just put your entries up here and hopefully that thing goes up. Okay. Let's just zoom down here. If you get an RSI divergence here, and then that adds more value to this. And this is probably an RSI divergence there as well. You see, so none of the things that you've learned before is just thrown away. None of it is thrown away. We're just adding value to it. And the reason we're looking at usual standard looking charts is because you need to bear in mind your Renko trend lines and stuff are never perfect. We're using Renko just for that entry and just to make it look nicer, because we like it to, we want a visual effect that looks good. Hello there, Dalvin. We want a visual effect that looks good, so this is why we're using Renko. So we get almost a 2 candle pullback here now. Not yet the setup, but this one is one where you would want to look at and put your stuff in there. Yeah. So what you could do is put on your tool there, and once you get your 2 candle pullback, then you would want to do that. So it's not a full risk trade here because we know where we are based on our weekly. Yeah, remember our weekly. If we go back to our weekly, then we can see that we are a little bit stuck in that area there. We got like 40 pips to get there. Then you move on to the next one that you found in the list. Yeah, the CAD versus the Swiss franc. Why did we take the CAD versus the Swiss franc? And remember that I've been looking throughout all the 28 pairs here. So CAD versus Swiss franc. Immediately we see volatility isn't so good. It's just going up, down in a small little range there. Small little range on your 240, but long. Yeah. Potential for targets and stuff, that is good. That's on your higher time frame. But then we also see that as potential target there. So from where we are up to there is only 33 pips. So that's lowering your risk immediately, if you're going to want to take that trade long. You got your confirmation, or you don't have a confirmation. It's only when you get that red candle there or white candle going up. You can see there's no confirmation here that it's going long. And you need to bear in mind, again, that is your area where you're looking for targets. And what else do you have here? And this is my M6. So this doesn't look that great. The M6 structure is now no longer the zigzag anyway. It looks more like this could be the structure happening. So the break that you're looking for is the breaks of this. So if we are in a long situation, yeah, if prices are going long, Then your correction, your zigzag to the short side, the minimum is zigzag. The minimum, the more of this could be a massive long trend coming down. 5 waves moves down, 7 waves moves down, 11 waves going down, 9 waves going down, correction coming down, 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 looking for the breaks there. So your M6 is more looking at Elliott waves correction. Now he's got a lot of various corrections. So whatever the correction is, try and identify that and then go. We don't like it when when we are in a move up, right? And the correction sort of thing is a leading diagonal, that. Because then what we are looking for is the manipulation on the bottom rather than the breakout on the top. So this in itself here, this setup doesn't look great to even bother with. So when I put it on the list there, you can just, ignore it now, because you've seen price action coming in later and you've seen that it's now no longer doing what you wanted to do or whatever. Then we have the euro versus the franc here. Also here, you can see immediately the volatility has been going like that all the time. So you can easily draw on this, that these are your areas here. That is your area that you are looking to trade in. And then also, that is your area that you are looking. So you're just looking inside that area now. So you're not looking for long-term trends or anything here. So the EMAs doesn't mean anything much here for us. Yeah. So this long potential, it hasn't confirmed long yet. And even if it does, we are quite close to where we are wanting to take profits. Yeah. This. We have how far do we have from year to year? From where it is about 40. That's fine. It's, it's double the amount. You want 20 and it's giving you a potential of 40. Yeah. Then on your M6, you are looking for, because you are fairly long bias, and here you don't have that structure. This is the example where you don't have structure on M6 because it's just a line going down. Yeah. Now you are looking for your structure on M3, and this is a 1, 2, 3, 4, 5 wave move down. So we're looking for 5, we're looking for 7, we're looking for 9, looking for 11. Any of those Elliott wave corrections. So we're looking for a break here and then a setup to go to the long side. And if that is what you are looking at, then you must look at all of these little things as well. Let me just put the Ikanashi template here. So if you are interested in that, you can see that you are in a range. You don't have volatility. Yeah, so that's lowering your risk already. No volatility. Daily prices are coming down still. So where would be the best place to turn actually? This would be the best place to turn here. So our long situation that we have here, we would like actually to see prices coming further down based on this. So how far more down do we want to go? About 20 odd pips down. So on your M6, you trying to build a reason to go further down here. What is 26 pips below this here? So there, 26 pips, about here. So this is the area where you'd prefer to look for that long. So the break, if it comes down here, and that break happens here, then we are better off doing that instead. Yeah. And for this reason, it is best to trade not many pairs. Because how are we going to look at all these things? Yeah, it's best to look at a few pairs only. And I'm suggesting to the new guys here, choose one. Choose one pair and look. Choose one pair from the daily live room. Choose one out of these pairs. And sometimes I mention in the room, oh, I like this one a lot, or this is my best or my favorite pair. And it's because, not because I know it's going to go. It's because it just looks the best. Mark had that picture yesterday on how the market looks like. No. And I had another sort of a webinar when we have the number 10. I know it just needs to look good for your mind so that you can stay in. Yeah. So we would like this thing to move down. And if you look at this as well now, you're looking at this low here to that high. And then 78.6 comes in here as well. So we could now move that down and say, hey, look, this is very good. So if it comes down here, if it does this now, it's 0.1. But if it does it here, it's 0.2. Better looking. Better area. The next of the pairs we took here was the euro versus the pound. Said watch M3 short. When I say watch, I mean I'm probably meaning not to really go for the trade properly. This is a nice example I chose for, I think it was for your purposes here to show you something. We are short, but that's my target. We are short. We know the targets are at the bottom. We are short. We know the targets are very, very close. Now look at this one. Now, this is my M3. This here is my M6 structure break, and it came into the form of a zigzag correction. You move up, comes down, a move higher. And then the break, and then that's where I'm supposed to be looking, right? Yeah. So watch this one. That's not the break. Yeah. It happened here, unfortunately. So it came down. So this is a working trade. You're supposed to take this trade going short. And then it doesn't work out. Now, your second opportunity, you can take that second opportunity or that second try again, even though you're crossing over and everything. It's because we are going with the rule that it's kissing the line here. It's coming, kisses the line, and then the potential move to the short side. This is why I mentioned in the room there, in the live room, just to watch this pair to see if we're going to get that kiss. So this turns red, and then we need to perhaps put our entries below the EMAs here and goes down to the short side. The other thing that adds value to that trading idea is that from this high to the ultimate low, it's exactly 78.6, almost kisses the line. So for that reason, I was thinking about taking this idea. And then if you do take that idea, again, you just add the tool here. stops above there, entries will be there. So now if you're already putting your tool on there, then you need to start analyzing again. What's going on your major chart here? Now, the short idea is a good one still, I think, because of what I'm seeing on this chart here. But the short idea here is not a good idea because we are sitting on a potential change of direction. But it doesn't mean we're not going to get that. Yeah, it's still fairly fine. We are below this year. But this is what I mean. When you find a trade, then you need to start looking at any reasons there to get in or to get out of the trade by just going through all of these and checking it out. Yeah. The 15-minute chart seems to be the only one that is in alignment with your trade idea to try and go short. Most of the others are not. Yeah. So go through it. If you found a potential and you've got your tool on there, you want to trade short, then go and look at your standard charts and go and look at your Heikin-Ashi charts just to see if you are still okay to go short. And then adjust your risk there accordingly. And then we have the pound, or which one do we have? The euro versus the yen. Again, watch for the break there. Let's see what's going on euro versus the yen. Okay, so this is like gives you the entire overview. Euro versus the yen. It is long. It is long. It is confirmed long, but look at where we are. We right up against a resistance there. So our long idea, perhaps not the best idea. Yeah. So what we had was, this is a break pullback, and only if you've taken this break pullbacks here are you allowed to take these without the proper correction going on there. Because there's no zigzag correction here, and this isn't the prices coming through the EMAs. It needs to come really through. That's not coming through. So this here is not one that you're supposed to be looking at. Yeah, if you haven't taken this trade here. So that is a thing there. Look for a pullback, go long, but look at where we are on the 12. We are not happy. We are stuck in this range here. Yeah, we've got 0.1, 0.2 dragged it down, 0.1, 0.2 dragged it down, or 0.1, 1, 2 drag, and look at, we are right there now. We are stuck there. So we don't want to take the long, even though we are getting, oh, it's a 1, 2, 3, and it didn't go work my way, or all that sort of thing. Look to see for reasons why it might not have gone your way. And then what do we have next here? Next is the pound versus the Aussie. Looking for a break long at the level. Now, when I mention level, it probably means we're going against the trade here. What was the trade? Aussie? Pound versus Aussie? Yeah. Okay, so you have your eye view of what's going on, right? You have your eye view here. So you are long. You got that barrier. Now, you are long, but your prices are short below. You've retraced, but prices are going below your EMAs. Yeah. So immediately it's a lower risk. We're below our EMAs, but we're still looking at longs. And the reasons for that is because we are at levels here. We are at levels. This is a nice looking trend line. This here is your 36 that has been tested and touched. And this again is a trend line going up to the long side here. That's the reasons why we are long. And that is where we're going to want to take our targets. So for that reason now, we are looking at breaks at levels. I said that this is a level. It's even a level. So we know it's a trend line coming from wherever. And also it's a level there. And you know we have this trend line on many going down here at the bottom on many of your other pairs. Yeah. So if you get a break here, this is the one without the structure, because it just drops down through the EMAs onto a level. Now, because it's a level, you could look for a potential long. That's against the trend, against everything, so it's lower risk. So now I was looking since here for a potential move. So now because there's a potential and I want to drop my tool on here and everything, what I say is, look, I want to see what is going on as well on the other charts. So weekly we're actually short, but we want to go long. So bear in mind that, yeah. Unless it's retracing further up, we're looking for more retracement. Something that's counting in its favor is that it's a break pullback to the long side on your Ikanashi. So immediately it's seemingly talking ourselves out of this because of the way it's looking and it's ugly. The only thing you really have now counting in your favor is a trend line. We're at a beautiful looking level, right? Going down to the lower time frame, you don't have an EMA here yet, but you are at a decent looking level. Yeah. What happened here? What happened here? What happened here? Why can't it happen here? So now you have a beautiful level. You're looking for more and more reasons to get in. Give me another one, please. Another one is going up. Okay, how about the 78? I'll wait for a pullback up until 78 there. And then I will wait for that break. So back here, so a nice little pullback down perhaps, and then the break. Then I'm watching on M3. So a lot needs to happen before I take this particular trade. Yeah. So, but at least you know you're waiting for that break up there. So we're going through a lot here. This video needs to be watched again and again. And according to a lot of people, the attention span gets weaker and weaker as it goes. Yeah. So the last one that I have here is the pound versus the franc. This is why the daily room is such a good idea. We go through these every single day, and then we pick out the best that we can. So the daily room is very important, together with the knowledge here. What is it? The next pair that I'm looking for is what did I say? Pound versus franc, I think. Yeah, pound versus the franc. We long. We got a confirmed long, and this is an easy one to look for because here you get a nice thing that shows us what you need to break here. So we got a 1, 2, 3, 4, 5 wave correction. Doesn't come all the way down. So we're still trying to qualify this point with that one, this point with that one, 78.6. So I'm hoping it crashes up from the 78.6, meaning the 78.6 was the area where the main traders are trying to go long. So I'm looking for the breakup here, and then I'm looking for the pullbacks on this one. So if you are interested in a trade like this, you go into your normal charts. Okay, I want to go long. Look at what's happening on my charts here. Okay, great. I've got another reason to go long. What's it doing? Weekly, it's going long. Where's the potential target? Way up there. 300 pips target. So this looks very good. Daily, it's retraced nicely down to the 12, 4 hourly. We are sitting on an area that could be manipulated. So we are very happy. So this one is going to be the best one. Pound versus Swiss franc, waiting for a break up. So back here, I'm really looking at that. So even if this is one trade, this one is a good one, because as we looked at the potential here on the weekly, we said, oh my God, there's a potential of 300 pips. If I get that trade, if this thing happens, then I'm happy, 300 pips done. Don't need to look at anything else. So that is why we choose the best pairs that we can find. And that's why we go through all the pairs for every single day. And this is how we do it here. Our profiles is set up like this. And whoever has problems with profiles, we're going to make a video on how to set up profiles. This is how it is. 480 is targets. 24 is direction. 12 is confirmed direction when you get the pullback. M6 is a break of structure. And then M3 is your entry. That's the why we do it like this. The next pair, whatever. Yeah. Let's just choose anyone at random here. Swiss franc, New Zealand. We've got four things going on here. Four things going on. Let's choose one that we don't have a setup on. Just makes it clearer. Pound New Zealand. One that we don't have a setup on. New Zealand dollar. Yeah. Okay, so again, 480, 240, 120, confirmed long. Looking for, this looks like already a setup happening there. You're looking for that as your break. You got 1, 2, 3, 4, 5 coming down. And then the points from year to year. It's nice. It's a 123 retracement. And then on the other side here, on this side, we have a 78.6, breaks the structure. And on M3, you have a structure break. You have a break up, a pullback. So this is a good one to try. So as a last thing here, let us just put in how we actually put in the orders here. So I didn't go through the other parts of it, but let's just add this one. Low risk, because we don't know what's going on completely. I'm putting this in so that we can just have at least a trade there. So 0.1, we're going to enter perhaps up there somewhere. We're going to put our stops below here. About 5 pips or whatever plus the spread there. And when prices gets maybe up there, we'll enter. So it's open pending. And then that is done for the long. Let's just see what it's doing here. What is it doing on your this? So we are long there as well. Daily, it's fine as well. We've got room to move. We have a 1, 2, 3 going long. We're at a good level. We got a break and a pullback there. 15-minute, we got our, yeah. So this is fine to try as to go for a long. So guys, that was it. As soon as we get any ideas on what we could do for another webinar, like the question that comes up in the Discord and stuff, we will make short little videos and invite you to answer those questions on the video. Yeah, for now, do we have any questions on it? I know this was a big one, a lot of information all at once. To be honest, each piece really needs a talk and a video on its own. I just went through every single thing. Yeah, so Richie, you say everything is cool. Yeah, I just want everybody just to give their comments on it. Yeah, just to let me know if there's anything that you need covered now, or any questions, or if you are happy with it. Okay, maybe the 45, yeah, maybe nobody's answering because I went over the 45 minutes. It's already 50 minutes. So I'm supposed to wait and stop at 45. Okay, guys. So thanks a lot for watching, and I hope you've learned something here. And keep it going in the Discord so that we know what to cover next. Okay, bye bye.